Is the Omaha real estate market starting to crash in terms of number of sales? Is inventory above pre-pandemic levels? What about Omaha home prices? And what can we expect as we hit the summer months in the Omaha area? Those are the questions we're going to answer in today's video, and we're going to get started right now. Let's start with inventory. We currently have 1,952 homes on the active market in Douglas and Sarpy County. Inventory was up 28.2% compared to June of 2023. If you break that down by construction type, we have 957 homes for sale in the new construction market and 994 homes for sale in the existing market. Inventory was up 14.9% in the new construction market compared to last year, and we saw a 44.3% jump in inventory in the existing market compared to last year. What if we broke inventory down by price range? Under $99,999, that market is essentially non-existent. We can see only 8 homes for sale in that price range. In the $100,000 to $200,000 price point, we have 108 homes for sale. Now, the bulk of the Omaha market is between the price ranges of $200,000 and $450,000. Now, in that segment, we have 1,077 homes for sale. And above $450,000, we have 758 homes for sale. I'm currently helping several buyers in the existing market at the $200,000 price point, and you still see multiple offers on properly priced homes and homes that are well staged and prepped to sell. As inventory increases, proper pricing and preparing your home for sale become critical. The days of overpricing your home and not staging your home are over. What about closed sales? Now, for the month of June, sales were down 16.2% compared to June of 2023. In June, we sold 995 homes in Douglas and Sarpy County. If you break that down between new and existing homes, for new construction, sales were down 6.5% compared to June of 2023, and sales were off 18.2% in the existing market. If we look at monthly closed sales, over the past 5 years, you're going to see a pattern in the market. Now, this pattern is known as seasonality. We sell fewer homes in the winter. As we move into spring, sales increase and sales peak in the summer months. Then they decrease in the fall and then bottom out in the winter. You can see in this year and in 2023, the peak was just not as high compared to 2021 and 2022. That's understandable because as interest rates increased, more and more buyers have been pushed to the sidelines. Now, we can go back 10 years and look at each data point as 12 months of activity. And this is going to flatten out the curve. And what we're going to see is we're selling fewer homes now than we have in the past 10 years. Always remember, there will always be a housing market. And you've heard me say this before because life continues to happen. People get married, people get divorced, have babies, and pass away. That always is going to create a need for housing. Opportunity is always out there. Homes are still being sold, just not as many. The buyers who are out there are highly qualified. If you're a buyer in the lower price points, you're in a tougher spot because in those price points, not as many homes are on the market. What about home prices? The median closed sales price in Douglas and Sarpy County was $340,000, which is up 1.5% compared to last year. Now, that's not a big increase, but it's still an increase. If we compare prices for new and existing homes, the median closed sales price for a new construction property was $424,399, and that's actually down compared to 2023. But when you compare 2024 to 2022, it's essentially flat. Now, for existing homes, the median closed sales price for an existing home was $313,000, and that is up 2.5%. Buying a home is not like buying a stock. I think too many people become fixated on buying at the absolute best time. The way Warren Buffett looks at buying a stock, he's buying a portion of a business. Markets go up and down. if you buy a home, plan to live in it for a while, and you do your due diligence, over time, you're going to be just fine. About 20 years ago, I bought a rental property in North Omaha for about $55,000. Now, at the time, that was market value. That was not necessarily a good deal. I kept the property, rented it out, and then a few years back, I sold it for $170,000. Now, looking back, even if I would have overpaid for the property when I bought it, and let's say I paid $60,000, I would have still made out okay. Let's look at home prices over the last 10 years. Now, in June of 2014, the median closed sales price of a home in the Omaha market was $165,000. And if you look at this graph, you're going to see month-to-month fluctuation, and that's normal. You also see home prices tend to peak in the summer months. Again, this is normal. The largest homes tend to sell in the summertime because people with large families usually have kids in school and they want to move during the summer months. That's why you see prices peak in the summer and then fall again as we go into autumn. Overall, what you're looking for is a trend upward. It's important to note that homes sell all year long. Even in the dead of winter, there is a market out there, even in the Omaha market. What about price per square foot? Now, a few weeks back, someone asked about the price per square foot. Now, keep in mind, not all square footage is created equal. It's cheaper to build up instead of out. Therefore, ranches tend to have a higher price than, let's say, a two-story home. Now, above grade square footage has more value than below grade, and the quality of the finishes makes a difference too. That being said, let's look at price per square foot, and we're going to look at a 12-month rolling average, and we're also going to separate existing from new construction. Just for fun, let's go back all the way to 2014. And remember, this is a 12-month rolling average, so it's going to take out some of the peaks and valleys that we normally see on a month-to-month basis. And you can also see the relationship between new and existing. For new construction, it is at $253 a square foot, and for existing, we're at $205 a square foot. Does that mean the new construction market will be crashing? No, it just simply means that builders will adjust with the market. The bulk of the homes sold are in the existing home market. Now, if new construction starts to slow down, builders are not dumb. They're going to do one of two things. They're going to either adjust what they are building, or they're going to slow the pace of building. If a builder has a home that is sitting vacant, that's going to cost that builder money. Builders do not want to celebrate a home's birthday. And why is that? Well, when the home gets reassessed, then the builder is paying full taxes on the property. They would rather take a small hit and just get it sold. Here's the other thing. The perfect home does not exist. The perfect time to buy doesn't exist either. In the course of my lifetime, I've bought homes during recessions, before wars, right before the GFC, and it really didn't bother me. And part of it was there was no YouTube at the time telling me the market was about to crash. I was in it for the long term. That doesn't mean you should run out and purchase just any home. You want to make sure you can afford the payment now. Don't bank on interest rates coming down, because what if they don't? Make sure you do your due diligence. Here's the problem, especially when you're buying a home in the lower price points in the Omaha market. In order to get a home under contract, you might have to consider waiving the home inspection. Now, that is a giant risk, and you should approach it knowing that if you waive the inspection, you're fine with taking that much risk. And here are the really big issues: the foundation, the roof, the furnace and AC, and the main sewer line. Even if you do a home inspection, the inspection will decrease your risk, not eliminate it. Even with new construction, things are going to happen. Speaking of new construction, be sure to explore all of your options when you're considering buying a home. Many people fail to consider new construction. One of the drawbacks of new construction is the wait time. Now, many buyers don't want to wait 9 to 10 months for a home to be built. Explore new construction, because many builders will sometimes have homes that are already partially built and are only 45 to 60 days out from completion. Are homes taking longer to sell? Yes. The average days on market was 20 days on the market. Let's go back 10 years, and when you look at the average days on market, you see a pattern. You see 10 years ago, on average, homes were taking longer to sell. Then in 2017 to 2020, you see a pattern of peaks and valleys. Homes tend to be on the market longer in the winter, then decrease in spring, and then sell fastest in the summer months. Then you increase in market time as you go into fall. Look at the years during the pandemic of 2021 and 2022. The pattern flattened out simply because homes were flying off the market all year long. And then since then, you can start to see more of a normalization in terms of time on market. Let's switch gears and look at the price of lumber. Here we have the price of lumber over the past year. Lumber is currently at $443 for 1,000 board feet. I think this says that the demand for lumber is not as great, so the price has gone down over the past year. Keep in mind, I'm not an economist, but to me, this is saying things are cooling off a little bit in the new construction market. Does that mean that new construction market is crashing? No, it just means demand is cooling and builders may not be building as many homes, so they don't need as much lumber. Why is the new construction market cooling? Now, let's look at the cost of money, interest rates. According to Mortgage News Daily, interest rates are currently right around the 7% range. Buyers are still in the market. Are there fewer buyers in the upper price points in new construction? Yes. Anytime you have uncertainty, people will naturally gravitate towards the sidelines. We definitely have uncertainty in an election year. Will we have a recession? It's hard to say. Remember, different markets handle recessions differently. I'm not saying everything is hunky-dory either. Only you can decide when is the right time for you to buy. If you look at inflation is still above acceptable levels. The inflation numbers are not out yet for the month of June, but May was still running hot at 3.3%. As a goal, the Federal Reserve would like to see inflation at around 2%. One indicator of a cooling real estate market is jobs. When a job is created, it adds a buyer to the marketplace. People with jobs buy homes. When a job is lost, it removes a buyer from the marketplace. We see unemployment increasing across the nation. According to the U.S. Bureau of Labor and Statistics, the unemployment rate is increasing. Overall, when the unemployment rate increases, it's actually good if you're in the market for buying a home. It means there's less competition or less demand. The U.S. unemployment rate was at 3.4% in 2023, and it went up to 3.7% in 2024. If you look at Douglas County, the unemployment rate went from 2.5% in 2023 to 2.9% in 2024. For Sarpy County, the unemployment rate went from 2.2% in 2023 to 2.6% in 2024. Again, we're fortunate in the Omaha market to have a very stable and diverse economy. Markets where there's just one predominant industry can get hit hard if we go into recession. And if you're in the market where a major employer decides to pack up and relocate to another city, in a situation like that, you can really see the real estate market take a hit.